Hi everyone, we're joined by James Noone once again. Thanks for joining us, James, and from Vanguard.
Pleasure to be here again, Bill. Thanks.
The weeks and days are becoming more interesting. The share markets have surged stronger, faster, better than probably what most economists have forecasted, which is obviously great to see. But what's Vanguard's take on this? Is it going to last? What's the long-term outlook now? What can we bring home from what we're seeing?
Yeah, definitely. Good question. Yeah, you're spot on. We've seen a lot of market movements. You know, sort of 20th of Feb was the peak, then right through to 23rd of March was the fall. So, you know, global markets dropped around 35% or more. And then since then, yeah, you're right, we've seen a marvellous recovery. And, you know, those of us in the industry sort of talk about a V-shaped recovery. We had that, steep fall and a steep recovery as well. The reality is, you know, markets are forward-looking, so they're trying to factor in what they think will happen in the economy going forward. So we think the markets have probably got a bit ahead of themselves. They've factored in too much recovery. We think the recovery will be in two phases. This first phase is that quick recovery, where businesses that can get back to business as usual will when the restrictions are eased. But the reality is for a lot of businesses and regions, the actual recovery will be far longer. So we think the second stage of the recovery will be a much longer recovery and more uncertain. So what I mean by that is it'll sort of be the 2 steps forward, 1 step back. The thing to remember as well is whilst coronavirus has dominated the headlines, there still is a lot of other challenges in the global economy. You know, we've got the US-China trade tension still going through. We've got Brexit that's still trying to work through. And more recently, unfortunately, some of the social unrest that's come through in the US and around the world. So, you know, all of those will have a role to play over the second stage of the recovery. And yeah, like I say, we think that recovery will be longer and a little bit more uncertain. But still on the road to recovery is the key message there.
Yep, sure. With cash offering very poor returns at the moment and for the foreseeable future yet, obviously the ticket will be in remaining diversified and staying the long course and diversification, which you guys are all about, obviously.
Yeah, definitely, and we agree. Like, obviously, you mentioned cash rates are at all-time lows here in Australia and around the world, and yeah, they'll be low for a little while. We do a lot of forward projections to try and give us an indication of what we think the longer-term returns will be, sort of 10-year returns. And whilst they're a little bit more favourable now than what they were a year ago, they're still quite low. So yeah, our belief is very much in line with, you know, broadly diversified portfolios at the right sort of level of risk and return for your own unique situation, and then being patient. You know, staying the course, letting time in the market do the job for you rather than trying to time the market in and out. And along that way, you know, managing, you know, your costs and your tax and your discipline will be critically important.
Some strong messages coming through loud and clear, and great to catch up. Hope to talk to you really soon. Thanks for your time, James.
Pleasure as always, Bill, and look forward to the next time.
Cheers.